Same income, same credit score, same down payment. Denied. If you're black in America and you've tried to buy a home, there's a good chance that sentence just hit different. Because according to federal mortgage data, black home buyers are denied nearly 3 times more often than white applicants with the exact same financial profile. That's not bad luck. That's not work on your credit. That's a hidden scam baked directly into the system. Today, I'm exposing exactly how this works, the shocking math behind how much it's costing black and brown families, and most importantly, how to fight back and actually win. Stick around. This could be the difference between renting forever and building generational wealth. Let's get into it. So let me introduce you to a hypothetical situation that's way too real for way too many people. Jamal is a high school teacher, 750 credit score, 20% down payment saved up, stable job for 8 years. He applies for a mortgage and gets denied. His white coworker Dave, same school, same salary, similar credit. Dave gets approved in 2 weeks with a better interest rate than Jamal even asked for. Jamal's not making this up. Jamal's not being paranoid. Jamal is a statistic, and not the good kind. Let's look at the actual numbers. According to 2023 HMDA data, that's the Home Mortgage Disclosure Act, which tracks every mortgage application in America, black applicants for conventional home purchase mortgages are denied at 16.6%. White applicants, 5.8%. That's a ratio of 2.86 to 1 nationally. But in cities like Boston, Milwaukee, and San Francisco, black applicants are denied at more than 3 times the rate of white applicants. 3 times. For the same type of loan, in the same economy, in 2023. Let me break that down so it really hits. If 100 white families apply for mortgages, about 94 get approved. If 100 black families apply with comparable qualifications, only about 83 get approved. That's 11 extra families who did everything right and still got told no. And it's not just black Americans feeling this. Hispanic applicants face denial rates more than double that of white applicants. Native Americans in Arizona, 32% denial rate compared to 8% for white applicants. That's 4 times higher. If you're black or brown in America, the mortgage system wasn't built for you. It was built despite you. Now let's talk about what happens when you do get approved, because the scam doesn't stop at the door. UC Berkeley researchers analyzed millions of mortgages and found that black and Latino borrowers are charged 7.9 basis points more on purchase mortgages than white borrowers with identical credit profiles. That might sound small. It's not. Across all minority borrowers nationwide, that adds up to $765 million per year in excess interest payments, just for having the wrong skin color on your application. Let me make this personal. Say you get a $300,000 mortgage at 6% instead of 5.92% because of that markup. Over 30 years, you're paying an extra $11,000. And that's just the interest rate discrimination. When you add in blocked access to refinancing, higher insurance premiums in redline zip codes, and inflated property taxes, researchers calculate black homeowners pay an average of $1,665 more per year. Over a 30-year mortgage, that's $67,320. $67,000 for the same house with the same income because of your race. That's not a gap. That's a heist. So how does this actually happen in 2026? Banks can't legally ask your race and then deny you, right? Right. They don't have to. The system does it automatically. Welcome to Redlining 2.0. Back in 1934, the Federal Housing Administration literally drew red lines around black neighborhoods and told banks not to lend there. They called these areas hazardous. The FHA's own underwriting manual said, and I quote, "Incompatible racial groups should not be permitted to live in the same communities." Between 1934 and 1962, only 2% of $120 billion in FHA-backed mortgages went to non-white borrowers. 2%. While white families built generational wealth through home ownership, black families were legally locked out. Now officially, redlining ended with the Fair Housing Act in 1968. But here's the thing. The red lines didn't disappear. They just went digital. Today's mortgage algorithms flag high-risk zip codes. Guess which zip codes those are? The same neighborhoods that were redlined 90 years ago. The algorithms don't see race. They see your address. And your address tells them everything they need to know. A 2024 study from Lehigh University tested AI mortgage systems and found that black applicants needed credit scores approximately 120 points higher than white applicants to receive the same approval rate. 120 points. That's not a bug. That's the feature. The markup investigated over 2 million mortgage applications and found that even after controlling for 17 different financial factors, black applicants were 80% more likely to be denied. Latino applicants, 40% more likely. Asian applicants, 50% more likely. Native American applicants, 70% more likely. The algorithm doesn't have to be racist. It just has to be trained on data from a racist system. And then it perpetuates that system forever. But wait, there's another layer to this scam that's even more brazen. Appraisal discrimination. So you've beaten the odds. You got approved for a mortgage. You found a house. You're ready to close. Then the appraiser shows up. In majority black neighborhoods, homes are appraised 13.9% below the contract price compared to 8.1% in white neighborhoods. That means black neighborhoods are almost twice as likely to be undervalued. The Brookings Institution found that homes in majority black neighborhoods are valued 21 to 23% below what identical homes would be worth in white neighborhoods. That's an average of $48,000 stolen from every black homeowner. Across all majority black neighborhoods in America, that adds up to $156 billion in cumulative lost wealth. 156 billion with a B. And the proof of discrimination is almost comically obvious. Multiple black families have conducted experiments where they whitewashed their homes, removed family photos, had white friends present for appraisals, and watched the values skyrocket. Carlette Duffy in Indianapolis had her home appraised at $125,000. She removed all evidence of her black family, had a white colleague stand in, and the second appraisal came back at $259,000. That's a 135% increase just by hiding her race. Tanisha Tate Austin in California saw her home jump from $995,000 to $1.48 million after whitewashing. That's a $487,000 difference. Nathan Connolly and Shani Mott are literally professors at Johns Hopkins who study housing discrimination. Their Baltimore home was appraised at $472,000. After removing family photos, it came back at $750,000. They're experts in this field, and it still happened to them. The appraisal industry is 94.7% white and 0.6% black. That's the least racially diverse of 800 occupations tracked by the Bureau of Labor Statistics. And somehow, we're supposed to believe the valuations are objective. Now let me tell you about Navy Federal Credit Union, the nation's largest credit union. $165 billion in assets, 13 million members. many of them veterans. In 2022, Navy Federal approved more than 75% of white mortgage applicants. Black applicants, less than 50%. That 29 percentage point gap was the widest of any top 50 mortgage lender in America. There are class action lawsuits pending. Navy Federal hired a civil rights attorney to do an external review and claims it found no race-based decision-making. The data says otherwise. Let me tell you some real stories, because this isn't just statistics. These are people's lives. There's a single mom in Atlanta. Let's call her Keisha. She's a nurse. Stable income for 6 years. Credit score of 720. She applied for a modest 3-bedroom house so her kids could have their own rooms. Denied. The reason given? Insufficient credit history. She has credit cards, a car loan, student loans she's been paying for a decade, but insufficient. Her white coworker with a similar profile closed on a bigger house 2 months later. Keisha is still renting. Every month, her rent goes up. Every month, her landlord builds equity. Every month, she falls further behind in the wealth-building game. She did everything right. The system said no anyway. Then there's the Martinez family. First-generation immigrants from Mexico. Both parents work. Combined income of $95,000. Good credit. They got approved for their mortgage, but at a rate 0.5% higher than comparable white borrowers in their area. Over 30 years, that 0.5% cost them about $30,000 extra. $30,000 that won't go to their kids' college fund, won't go to retirement savings, won't go to building the generational wealth they came to this country to create. It goes to the bank. Because of where their family came from. This is how the wealth gap compounds. White families have a median net worth of $285,000. Black families, $44,000. That's a 6.3 to 1 ratio. And home equity is the single largest component of wealth for most American families. When you systematically deny mortgages, charge higher rates, and undervalue homes in Black neighborhoods, you're not just discriminating against individuals. You're engineering poverty across generations. The 2008 crash proved this. 53% of Black borrowers received subprime loans in 2006, compared to 18% of white borrowers. And here's the kicker. The Center for Responsible Lending found that 61% of subprime borrowers actually qualified for prime loans. They were steered into worse products on purpose. Wells Fargo employees internally called these loans ghetto loans. They specifically recruited borrowers at Black churches. When the crash came, Black households lost 33% of their total wealth. White households lost 12%. The damage still hasn't recovered. So what do you actually do about this? Because here's the thing. I'm not telling you this just to make you angry. I'm telling you this so you can fight back. The system is rigged, but it's not unbeatable. Tip 1. Shop multiple lenders. Don't just walk into Bank of America and accept whatever they offer. Get quotes from at least 3 to 5 lenders. And specifically, look at Black-owned banks and credit unions. OneUnited Bank is the largest Black-owned bank in America, and they're CDFI certified, which means they have more flexible underwriting for underserved communities. Hope Credit Union serves the Deep South with a specific mission to approve borrowers that traditional banks reject. Carver Federal Savings Bank reinvests 80 cents of every dollar back into Harlem. These institutions exist specifically because the mainstream system fails Black borrowers. Use them. Tip 2. Know your rights on appraisals. Lenders are required to disclose your right to request a reconsideration of value. That means if your appraisal comes in suspiciously low, you can challenge it. Gather comparable sales from similar neighborhoods, not just your immediate area. Document any upgrades or features the appraiser might have missed. Request a second appraisal if needed. The Appraisal Complaint National Hotline is 877-739-0096. Use it. Tip 3. Build credit through alternative reporting. The median credit score for Black Americans is 639, compared to 730 for white Americans. Part of that gap comes from what gets reported. Rent payments historically haven't counted toward your credit score, even though they prove you can make consistent housing payments. Services like Boom cost $10 to enroll, plus $2 a year, and they report your rent to all 3 credit bureaus. Users report increases of 20 to over 100 points. That can move you from a maybe to an approved and save you thousands in interest. Tip 4. File complaints when you experience discrimination. HUD accepts fair housing complaints for up to 1 year after the incident. Go to hud.gov/fairhousing or call 800-669-9777. The National Fair Housing Alliance at nationalfairhousing.org maintains a network of 200 local fair housing centers that can help you document and fight discrimination. The Department of Justice has secured over $150 million in settlements through their Combating Redlining initiative since 2021. That money came from banks that got caught. More complaints mean more investigations, mean more accountability. Tip 5. The math hack. Improving your credit score by just 50 points can drop your interest rate by 1/4 to 0.5%. On a $300,000 mortgage, that saves you $15,000 to $30,000 over the life of the loan. How do you get 50 points in 3 months? Pay down credit card balances to under 30% utilization. Become an authorized user on a family member's old account with perfect payment history. Dispute any errors on your credit report. These aren't secrets, they're just not advertised. The system is designed to keep you renting forever, paying someone else's mortgage, building someone else's wealth. But you can beat it, not by hoping the system changes, by understanding how it works and using every tool available to navigate around its traps. The Black-white homeownership gap today is wider than it was in 1968, when housing discrimination was literally legal. That's not an accident. That's a policy choice reinforced by algorithms, appraisers, and lending practices that haven't evolved nearly as much as they claim. But here's what the system doesn't want you to know. Once you get in, homeownership still builds wealth. Black homeowners who make it through the gauntlet still see their equity grow. The key is getting through. So save this video. Share it with anyone trying to buy a home. Use the resources. Fight the appraisals. Shop the lenders. Build the credit. And don't let a system designed to say no stop you from building what your family deserves. If you've experienced mortgage discrimination or appraisal bias, drop your story in the comments. I'll feature viewer stories in a future video because the more we talk about this, the harder it is for them to hide it. Hit subscribe for more videos exposing how the financial system extracts wealth from Black and brown communities and what you can do to extract it back. I'll see you in the next one.